Happy Saturday. I hope you're doing well. I'm going to go over my weekly analysis and just show you how I'm breaking last week's action down and how I can really look at it from a better perspective. So jump on the 15-minute, come back down. Right, then you can see I drew the low and the high. Right, so you gotta move down like that, come back over here, tap into this imbalance, right? You could have got a trade over here. Let's highlight this, right? So yeah, could have got a trade over here, trading within oh, I understand what I'm saying. The screen's a bit bright. Could have got a trade over there. The tweezer top. There should be some type of accumulation there where you could take it to the top over here. That would have been trade number one. Trade number two would have been, you would have been able to see some type of break of structure along here. This would have been trade number two. Trade number three could have been over here or over here. Let's highlight them like we always do, and right, U shape, like I just literally explained to you, and we filled the imbalance, then we rejected back because we are bearish on the higher time frame. So we came to where we're supposed to go to, as you see, and we're bearish all the way here. We came to where we're supposed to go to, rejected. Till in the 1 minute. As I said, U shape, right? What are we going to look at? Let's see, price is going to come down, right? It's going to come back up. This is all before market open, so you can't really do anything. Price is going to sell off at the beginning of the day, have a little movement. Sometimes the market, sometimes if there's not a clear pattern on the open, I'll let it settle. I think that's very, very beneficial, and it really does allow you to not get faked out. Granted, if you're watching this intraday, you're probably, well, I saw this zone and I said price is gonna accumulate and run to here, right? So let's remove trend line drawings. I said price is gonna run up to there. It did, right? We rejected off there. That's if you're a scalper, you can take these trades, right? If you want to be a bit more patient, you can wait till we get, we see equal highs here, they get swept, comes back down, refusal to go lower, understanding that we are bearish overall, and this could easily be go up like that, then come back lower like this. So you don't know, right? It's only because we have refusal to go lower here, the equal lows here, and then I would have taken this over here, risk getting to about here. So 53 to about 45 cents. That's like me using a proper stop loss. My stop loss would have been, if it doesn't hold here, I'm gonna be out of it. So my stop loss would have been like 16, 17 cents. Then looking to take it right here. That's it. So 4.54. So $1.20. That's enough. Again, if you're trading SPY contracts the way I trade them, it's enough. So if you're trading them, it's enough, and that's all you really need to know. That would have been trade number one. Push up to here. All right, let's see how this looks on a 5 minute, right? Because we want to when we base our trades, we want them to be in alignment with the 5 minutes. So over here, you would have basically seen like a U with an F, which is basically what I like to see, refusal to go lower. These candles over here, all refusing to go lower, forming some type of second half of the W, right, looking to run it up to here, right? Perfect, beautiful trade. Over here, we have the formation of a 5 minute M. Just make it real clear and pretty for you guys. Is it perfect? No, but is it tradable? Yes. You see 5 minute break of structure over here. But we're understanding that the higher time frame is bearish. We just had a 5 minute push up to get to where we need to go. We filled this imbalance, price went to where it had to go, and then we rejected because on the 15, 30, and 1 hour we are bearish. So what do we want to do? We want to look at this, zoom in on it under the microscope, look to take profits right over there, right? Simple enough. Oh yeah, it went down here. Yes, that's perfectly fine, right? We don't know what the market's going to do. We don't know, and I'm not going to pretend like I'm a magician that has the answers to the universe, because that's just untrue. So let's zoom in. Too big. Too big as well. Right, higher high, higher low, right? So as you can see, let's clear this up. Let's clear these trend lines up. Market structure over here and over here, right? Sometimes you can use the first one and the second one. It all depends on your preference, right? This would have been enough, but sometimes I'll draw a little second one just to show, you know, we're actually like going through with it. And you want to see a candle closure, not necessarily a wick. This is a candle closure below, then this is another candle closure below, and then we had another little consolidation over here. If you wanted to, this would have been a nice optimal entry. It's an area of consolidation up here, refusal to go higher with broke structure. We have a 1 minute bear flag, which shows we are continuing the bearish momentum downward until we get to where we want to go. And then if you look at the 15 minute, 5 minute, they're all pointing toward bearish signs. If you look at the 1 hour, the 30 minute, the 1 hour, 2 hour, 4 hour, it's all kind of pointing to bearish signs, right? Because price needs to go to where it needs to go, and you would have gotten right over here, right? And you would have been okay, right? You could have gotten over here if you were to just take like a straight intuition trade. Sometimes that's beneficial, sometimes it's not. I might have taken it there, or I might have taken it here. It doesn't really matter, because either way, you don't have to really get fixated on the perfect entry. I know sometimes if I didn't catch it here and it already went here, I'd be like, shit, like I kind of missed it. But that's just like beginner level thinking, because you don't know how far the market's going to go. So don't make yourself lose by not getting into it when you don't know how far it will go. So you're basically talking yourself out of a trade that will most likely be a winner, because that's what usually happens to me. So either you would have gotten here, or you could get in here, right? This is a beautiful continuation play that I like to see. Again, the higher time frames are aligned. That's how I like to trade. I like to see time frames aligned. Would have taken it down to here, right? And yeah, perfect, good enough for me. So that's 31. So yeah, it's $1.20 again. So just as some context, if you trade SPY options, I trade in the money SPY options. Contracts are relatively cheap. They're about 180 to my parents are arguing.